Namaskar and thanks for tuning in to the Economic Brief, our weekly business current affairs program with news about India's economy and a sense also of global winds, head or tail. On the program, India, Russia look long-term. They target $100 billion trade by 2030, look to diversify beyond oil and gas. AI boom cushions global economy amid tariff turmoil. IMF and OECD point to growth. BlackRock warns of 2026 volatility. Microsoft, Amazon unveil record $50 billion plus India plans, betting on AI, jobs and digital growth surge. Warner Brothers Discovery at the center of a $100 billion Hollywood bidding war. Paramount tops Netflix offer. Trump also steps in. Now, U.S. Representative Bill Huizenga described ties with India as a defining relationship of the 21st century. He was speaking at a White House Foreign Affairs Subcommittee hearing on the U.S.-India strategic partnership. And he emphasized India's central role in Washington's vision for a free and open Indo-Pacific. He highlighted that the United States consistently views India as a key democratic partner in shaping both security and economic architecture of the region. Let's listen.
India is one of the fastest growing major economies in the world. American companies increasingly see India not just as a market, but as a partner to innovation, especially in AI, communications, and advanced technologies, where collaboration already exists. American companies are eager to enter the Indian market on a level playing field. A new trade deal with India under President Trump and Prime Minister Modi would further realize this goal and enhance the relationship. Open markets, strengthening supply chains, and driving innovation, all of which would chart a new beginning in our storied partnership.
Well, it's not just the United States that is looking at India closely. We see that the relationship between India and Russia in terms of business is now getting stronger and stronger. If we look at some numbers coming up behind me, we can see that bilateral trade currently is about $68.7 billion, but this is heavily in favor of Russia because we are importing lots of hydrocarbons. But it's driven, as I said, by energy, defense, and the trade balance is favoring Russia, but India is Russia's largest trading partner in South Asia. If we try and see what the vision is, so both countries have a long-term economic cooperation agreement signed through to 2030, and they are targeting $100 billion annual trade volumes. And the focus is on diversifying well beyond hydrocarbons. And there have been, there was a business forum meeting when President Putin had come to India, and in that business forum meeting, several agreements were signed. Let's look at some of the key agreements. Coming up here. Now, Sber is actually the largest bank in Russia. It dates back to the Soviet Union times. But they are, of course, dealing with a lot of the payments interfaces. And Sber and CSIR have a partnership to boost industrial R&D and innovation. So the focus is really on AI, on data analytics, and this is all for industrial applications. Opportunities in digital, finance, AI, and cybersecurity. And there are JVs as well for manufacturing and industrial technology. If we look on what Sber is also doing, they have tied up actually with over 6,000 Indian companies for payments in the national currency, and that is going to finance this trade boost. So collaborations we can see are also in pharma. In India is going to, as you know, is the global pharmacy of the world for generic drugs and drug development. And Russia has lots of distributors, so there's a potential for joint clinical trials as well and regulatory harmonization. So the regulatory requirements are necessary for this to take place, especially in this drug-related area. And India's generics plus Russia's biotechnology is going to be mutual healthcare advantage for both countries. That's the way we see it. Let's move on to our next story. Our next slide, beyond pharmaceuticals, we're looking at dealing also in other areas, the production and distribution of beverages. Largely, both countries are pretty good in the FMCG space, so we're looking at that. And then there is also media collaborations, TASS and PTI, Prasar Bharati, Gazprom Media, for information exchange and culture. What does this do? This also helps business, because we see that, every businessman also from both sides need to have proper information before they make a business deal. And the right kind of reporting is required for these countries to present their own cases, especially in the business realm. And under the current sanctions regime that, that Russia is facing, they want proper information to come out of their country and for it to be portrayed in the right direction. So growth in consumer goods is likely to take place, and deeper cultural familiarity because largely of this information exchange that is taking place. In our final slide, we look at this. In fact, more than the final slide, actually, they were talking about logistics and shipping. This is, of course, extremely important. And we know that unless you have connectivity, then these investments are not going to really generate much, because you need to have access to the markets. And there are investments in port infrastructure, customs digitization, enhanced air cargo and rail connectivity, and of course the shipping via the international north-south transport corridor, also shipbuilding and shipping in cold waters, which is what some of the agreements that India and Russia signed. Our final slide is to look at the roadmap ahead. And if we look at the roadmap ahead, it is to diversify trade beyond oil and defense, is what we said right at the beginning, and to empower small businesses to drive innovation and exports, and to leverage the vision of 2030 for predictable long-term cooperation. That, in fact, is basically what we are looking at. Now, before we move on, we were talking about the United States. The US Fed has taken another important decision. It has cut rates for the third time in 2025. It set the benchmark at 3.5% to 3.75%, its lowest in 3 years. Projections signal another cut next year. But the Fed chair, Jerome Powell, he says the policy is now near neutral and that the Fed will pause to assess the economic trends.
Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level.
And Shubhamoy Bhattacharjee, Director, Center for Regulatory Governance, O.P. Jindal University, and well-known business affairs journalist, is with us in the studio. Mr. Bhattacharjee, so if we look at India's trade with Russia, do you see it leading to viable de-dollarization, at least between the two countries? I talked about the Spear Bank, as they call it, dealing with more than 6,000 Indian companies for payment interface to deal outside the dollar.
Yeah, what's happening is that across the world, the trade relations are changing very drastically. So what shape they'll take, we'll have to wait a couple of more years to really span out. But definitely India and Russia are in a very interesting stage. India, obviously, the world's 4th largest economy. So that's a very major market for Russian goods. Russia is trying to revive its manufacturing as a base to, Russia is sort of trying to turn towards Asia.
Yes.
And do business with Asia. The interesting thing for India is that Russia now needs a huge amount of engineering and a huge amount of, as you talked about, pharmaceutical and banking support and others to be able to do that sort of a manufacturing change.
Right.
So India and Russia are sort of fitting each other perfectly. And the fact that we have always done trade with each other in rupee, ruble, we have a basic understanding of each other's requirements, definitely gives a very good chance to take the business relationship beyond just oil and hydrocarbons.
So indeed, and also defense, how does one actually move beyond these schemes or these sectors fast enough? I mean, there was also talk a lot about SMEs. Do you think that, we have the base for, there's also a mobility agreement that is being worked out, for these countries to actually, I mean, for the businesses to actually meet one-on-one and take this relationship forward, because it has been largely government to government?
That part will still remain. I mean, the India-Russia government-to-government relationship is a very major part. It's unlike our relationship with any other country.
Yeah.
So that part is definitely there. Probably that also provides the solidity and the support to the business of the respective countries, that both the governments, and as exemplified by President Putin's visit to and discussion with Prime Minister Modi, is that there's a basic support which doesn't change over the years, over the decades, and that's very big in the current stage, where today, in fact, you're one of the topics that you just touched upon, President Trump getting into a merger and amalgamation between two in the case of Netflix Warner deal. Now, that sort of a thing, a government getting in, shows that how governments today are very strongly entwined with the business. So the fact that India and Russia have a very strong business, which is supported by the two governments, there's a strong government-to-government support, is actually a very I should say, a very positive thing.
Okay, we leave it there for the moment, Mr. Bhattacharjee, but stay with us for our next story as well. And this story we are going to talk about is about AI spending and how, in fact, it has saved. Artificial intelligence is emerging as an unexpected stabilizer in a global economy, which has been unsettled by trade wars and also rising tariffs. Massive investments led by the US, in fact, are boosting productivity, cutting costs, and cushioning inflationary pressure, according to the IMF. And the OECD also notes that there's stronger than expected growth, and that firms like Estee Lauder, this is not what OECD says, but our report is saying this, that Estee Lauder is also leveraging AI to drive innovation, and technology is increasingly seen not just as a tool of efficiency, it's a shield against geopolitical market volatility. Let's take a look at this report. In a world rattled by trade wars and rising tariffs, artificial intelligence has quietly helped steady the global economy. According to the International Monetary Fund, massive investments in AI, particularly in the United States, have boosted productivity, lowered costs, and muted the inflationary shock that tariffs were expected to unleash. Asset management company BlackRock sees AI driving markets in 2026 as well, but warns of volatility from speculation and leverage. The OECD earlier this month said global growth is stronger than expected, with an AI boom offsetting US tariff shocks.
However, our outlook highlights key fragilities on the horizon, from elevated trade restrictions to policy uncertainty and concerns about supply chain security, to rising public spending pressures from increased defense requirements and the rising economic and fiscal impacts of population aging, and vulnerabilities associated with high financial asset valuations, such as for AI-related investments and cryptocurrencies.
AI is streamlining industries, cutting costs and shielding firms from tariffs. The IMF says AI spending is cushioning growth and inflation amid trade tensions. Even Estee Lauder is expanding brands to win younger shoppers in an AI-driven market.
But part of DCM philosophy is also to incubate new brands. And today, in the world driven by AI, driven by speed, driven by technology disruption, we can create new brands. And recently, we've created a new bath and body brand called Loofah that we are incubating as we speak, and we are launching. So you're going to see us doing external but internal incubation through M&As to be able to continue to grow in the future.
For governments, the message is clear. Investing in artificial intelligence isn't just about innovation, it's about economic survival. And for businesses, it's a reminder that embracing AI early can mean weathering storms in global trade. Artificial intelligence may not end trade wars, but it is proving to be a powerful shield against their economic fallout. The Economic Brief, DD India. And Shubhamay Bhattacharjee, Director, Center for Regulatory Governance at O.P. Jindal Global University, continues to be with us. Mr. Bhattacharjee, so there are big investments coming into India in terms of AI. We're going to run a story on that as well. But how well positioned is India, currently to take advantage of AI?
Well, let's put it this way. First of all, AI is not something that you can sort of, decide whether or not to be involved in. It is there and it's bound to be there. Fortunately for India, what's happened is that the India government has recognized AI for what it is, that it is the most significant changer of economic conditions in a country. Now, the India AI mission, which outlay of something like 76,000 crore, and that's a very big amount which the India government has decided to put in, is a very major support that the government has already made towards making AI, get involved in AI technology, AI innovation, AI adoption. All of these things will now be rolling out. Now, what's happening is that India has got a huge scientific manpower. India's got a huge technical manpower. The point is that there was always the issue that how much is the financing available to be able to make that use of that AI. Right. So as you can see, in fact, in one of your earlier stories, you talked about Microsoft and Amazon putting in major amount of money, and right. Their money is basically coming into India for AI related work. So yes. Obviously they realize that what the India government is putting in is complementary to what they're doing. So indeed. Yes, we seem to be getting the game right.
Indeed. The IMF believes that AI is going to raise the output per worker significantly. I mean, the tools are there, so a person's output increases, quality of work increases. That's giving the West and countries with aging populations a certain sort of advantage currently. So I mean, it's a development strategy that one has to adopt or look into, because is it AI dividend versus demographic dividend?
Well, actually, it's inseparable. I mean, one would expect that in India, with the huge young population, that should be, and in fact, it's showing a very ready, easily adaptability towards AI. So there we have that advantage. We don't have to tell people. In fact, surveys done earlier this year, I think it was by, not by IMF, but by The Economist magazine, I think, which showed what is the adoption, or rather what is the feeling towards AI, what is the attitude towards AI, and that shows India is one of the most right at the top there in terms of people's comfort level with AI. That's a very significant step, because that means the government or any other company doesn't need to persuade people that AI is important. People are involved. And in fact, if you look at the AI downloads, India is right at the top for whatever reasons, but those are significant changes.
We'll leave it there. Thank you very much, Mr. Shubhamay Bhattacharjee, Director, Center for Regulatory Governance at O.P. Jindal Global University. Thank you for helping us unpack those stories. Now, as Mr. Bhattacharjee was saying, India is at the heart of the global tech investment surge, with Microsoft and Amazon announcing multi-billion-dollar plans to expand data centers, cloud capacity, and AI skills. Now, as India nears 1 billion internet users, the race is about influence, about infrastructure, and who will shape the next decade of the digital economy. Diptanshu Kashyap has a report.
Global tech giants are accelerating their bets on India, rolling out some of their largest commitments anywhere in the world. Just a day after Microsoft announced a $17.5 billion plan to build India's AI infrastructure, its biggest investment in Asia, Amazon unveiled plans to invest more than $35 billion through 2030. Amazon says the push will expand exports, create 1 million jobs, and drive AI-powered digitization for millions of small businesses. The opportunity lies in India's rapidly expanding digital base, now approaching 900 million internet users. and the soaring demand for data centers and cloud capacity that will underpin the next phase of AI growth.
Right here in India, we're thrilled about sort of all the data center capacity that is coming live. We already have stuff in Pune and in Chennai and Mumbai. And we're very excited of the India South Central, which is in Hyderabad, that's going to come up next year. And so this is going to be the next big data center region for us, which is going to be scaled very rapidly. We are committing to scale 20 million people across India in AI skills, and so we are very excited about this.
India's cloud and AI infrastructure is expanding at one of the fastest rates globally, fueled by surging digital demand. With AI training, enterprise cloud migration, and data-heavy services accelerating, the country has become a priority market for hyperscalers or massive cloud computing providers looking to scale their AI and cloud operations. The twin bets from Microsoft and Amazon come as India positions itself as a global hub for AI. New Delhi is set to host the Global AI Summit in February, highlighting the country's growing role in the global technology and AI ecosystem. These back-to-back mega investments validate India's digital scale and signal how central it has become to the next wave of AI growth.
The investments from Microsoft and Amazon mark a new chapter in India's tech story, the one where global giants aren't just selling to consumers, but also building the digital backbone of the nation's AI future. And with the AI Summit approaching, the race to shape that future is just the beginning. In New Delhi, this is Dipanshu Kashyap for the Economic Brief, DD India.
And Hollywood faces a $100 billion it's a showdown as Netflix and Paramount battle for Warner Brothers Discovery. With US President Donald Trump weighing in, the fight actually extends beyond entertainment to influence, regulation, and the future of global streaming. Dipanshu Kashyap explains, and we leave you with his report. Thank you very much for watching the Economic Brief. See you next week. Namaskar.
What do this year's hits, one battle after another, Sinners, F1 and Superman have in common? They all come from a studio now at the heart of Hollywood's most expensive and dramatic ownership battle yet. Warner Brothers has become the crown jewel in a $100 billion plus showdown. Netflix thought it had won the day with a $72 billion offer, but Paramount has come back swinging with a $108.4 billion all-cash bid, turning this into one of the most intense corporate battles in entertainment history. And in an unprecedented twist, US President Donald Trump says he'll be involved in reviewing the deal, adding political fire to an already explosive fight.
I know the companies very well. I know what they're doing, but I have to see what percentage of market they have. We have to see the Netflix percentage of market, Paramount, the percentage of market. I mean, none of them are particularly great friends of mine. You know, I want to do what's right. It's so very important to do what's right.
Both sides are now lobbying furiously, meeting investors across the week as the Warner Brothers board continues to recommend Netflix offer while reviewing Paramount's challenge. Trump's intervention has added an unusual twist, partly because of who's behind the bids. Paramount's offer is led by David Ellison, whose father, Larry Ellison, is a longtime Trump ally and backed in part by Affinity Partners, the private equity firm run by Trump's son-in-law, Jared Kushner. Those connections raise questions about whether political influence could sway the outcome. At the heart of the fight is Warner Brothers Discovery itself, one of the world's most valuable entertainment powerhouses, home to HBO, DC, CNN, and some of Hollywood's most iconic franchises. Whoever controls this library instantly reshapes the global media landscape, which is why both Netflix and Paramount see WBD as the ultimate prize for expanding their streaming reach and future influence. Experts warn this battle could drag on for months as regulators, politicians, and Hollywood unions weigh in, They cautioned that merging two major studios could shrink competition, trigger intense antitrust scrutiny, and even reshape the future of theatrical releases. Lawmakers warn these mega mergers risk leaving a single company with unprecedented control over what Americans watch.
From Hollywood's first sound picture, The Jazz Singer, and timeless classics like Casablanca, to modern blockbuster franchises like Harry Potter and television hits like Friends, Warner Brothers has shaped the language of cinema since 1923. But now, as streaming giants wage a multi-billion-dollar battle and policymakers warn of antitrust upheaval, the legacy of this legendary studio hangs in the balance. And now, in a twist, President Trump says that any deal should ensure that CNN gets new ownership or gets sold separately, intensifying the political pressure over an already volatile takeover. In New Delhi, this is Dipanshu Kashyap for the Economic Brief, DD India.